Alright everybody, good night. Today's the 7th of June 2017. Today's webinar is about candlesticks and their formations, how they work, what they look like, where you should be looking at certain candlesticks for certain types of chart reactions. And so we are going to get right into it. It really doesn't matter which chart that I bring up. The whole basis of this of the webinar in general is just to kind of show you candlesticks themselves and how they react to certain environments or certain areas on the charts, and what kind of candlesticks are you looking for certain areas in the chart. Now, when you're looking at candlesticks themselves, right? During the day, if you're looking at them for intraday plays only, during the day you can see candlesticks that are relatively bullish or bearish on a whole, and they won't give you a reaction like you were expecting it to, and then you'll wonder, hey, well, what's the reason why this candlestick isn't giving me the reaction that I really expected to get out of it? For example, what I'm trying to say is, like, you'll see like you'll see a bullish candlestick in an area on a chart where, okay, look at SPY, for example, a huge bullish engulfing where the chart engulfed the previous candle, engulfed the first candle, right? So I mean, okay, let's get into basics a little bit, just in case there's somebody here that doesn't understand the full grasp of it, right? Candlesticks were invented by the Japanese rice traders, and so this was a long time ago, and I don't have the specifics right now, obviously, but I could get that for you if you wanted. Basically, as a general outlook on candlesticks itself, it's the ones that I use. There are a lot of different types of chart formations that chart graphic chart descriptions that you can use. I mean, but for me, I like candlesticks. There are a whole bunch of other things that you can use as far as if you don't like candlesticks. But for me, I like them. I'm familiar with them, and I'm comfortable using them. So generally speaking, if I'm looking at this SPY chart here, there are a bunch of candlesticks that I can point out, and as you excel or you progress in your trading, there are there's there are candlesticks that you need to recognize right away. Now you can go through candlesticks themselves. Now do remember that candlesticks are the individual candles, right? No matter what time frame you're using, if you're using a 5-minute chart like this one, or you're using a 15-minute chart like this one, each individual 15-minute time frame is one candlestick. So each individual candle for that duration of time tells a different story as for the price action that's going on. Now, the candlesticks themselves have a different meaning from the candlestick formation that you can get. Okay, so those are two different things, and those are two different things that people sometimes confuse. What I'm saying is, like, you can look for a downtrend, right, and a breakout, and you look for a candlestick that has strength to it. So say, for example, you're looking at SPY. We'll do a relative downtrend here. That's the average downtrend that the chart's breaking out in. The kind of candlesticks that you want to see when your chart's actually breaking through an area of resistance, you want to see a strong candle. You want to see a candle that shows you a lot of things. You want to see a candle that shows you power, authority, strength. And so when you're looking for a certain candlestick that, and these are not types of candlesticks, I'm just showing the relative strength of the individual candlestick. When you're looking for a breakout area, for a new high of day push, the candlesticks themselves they have to have some sort of authority when it comes to the area of the chart that it's breaking out of, the area of the chart that it's trying to move through. So, like, for example, there's this relative downtrend here on SPY chart, and with that sort of candle that comes through it, the strength, the authority, the power that comes through with it, you can see that the candle obviously opened up here, and then it pushed all the way up here. So the candlestick itself told me that the price level opened under the trend line, and the price first came down, it dipped, and then the buyers took it all the way back up, and this 5-minute candle closed at the top here. So if it's a red candle, obviously, like for example for this one, you would know that the price opened here, and the sellers actually brought it all the way down here and pushed it back here. So that's why you have a red candle as compared to a green candle. So always remember that the candlesticks themselves, the color of them do make a difference, and it's not just about, hey, if I see a red, I'm looking at sellers, if I see a green, I'm looking at buyers, and it's just that easy. It really isn't, and there should be a lot more in-depth knowledge that should be taught about candlesticks and their relationships and the way that they react to charts. A lot of people don't go into the depth of it, and I feel like people just kind of go over the shell area of what candlesticks really could mean. I feel like people just kind of hover around it. Well, here's a bullish engulfing, here's a hanging man, here's a hammer, here's an inverted, whatever. And so people just go through the names and they show you a picture of it, and they expect you to understand where do you place these candles on your chart so that it makes sense. If it doesn't make sense, it doesn't make you money. If it's not making you money, then who cares what kind of candlestick it was to begin with? So the basic thing is that the candlesticks that you're trying to use or see, I'm a big candlestick trader. I'm a very big technical trader, and candlesticks are a part of my foundation as a trader. And so for me, I do respect them. I respect them and I trust them because I've seen them work before. Now, if you don't respect them, don't trust them, don't care for them, that's fine. But it's just because you haven't maybe given it a fair chance to at least try to see that there's a different side of it. Or maybe it is that you've used them and they've failed for you. So let's address that. Where do candlesticks fail on you? When you see a bullish hammer and you take it on the long side, damn, why did it fail on me? Where are you using that certain candlestick, that certain directional candle that may be in a wrong spot on a chart? Maybe you're buying a hammer which you think is a bullish candlestick, and it is, but where's the relationship of that hammer in conjunction with where the price level is? So for example, I get out of this chart because this one's kind of boring me there a little bit. Let's jump into any other chart, actually, something with a little bit more strength. Okay, when sometimes you're looking at strong candles, you're looking at breakout candles, and they fail you. And so the interpretation sometimes is the candlesticks don't work. But what you have to notice is, where are your candlesticks failing you? Where are your candlesticks not being something? I want to show you something on this chart that's actually a prime example of something that nobody wants to show you. A failed strong candlestick breakout. That's a good example of a failed strong candlestick breakout. And that's something that a lot of people won't show you. And why? Because, oh, I gotta show you everything that works so you can think that it's just that easy. But I never really sugarcoat anything for anybody as far as trading goes, because you know what? It's real money, and real stuff like this does happen. You see a strong breakout chart like that, there's a possibility that I may take that trade myself. And so would that be a chart break into the upside, and this candle pulled back in, but this candle pushed right through? Would that be a chart that I might even take for myself on the long side? And the answer would be yes. Strong volume push into the breakout candle, and then we have a candle that opens above the downtrend line, and so yeah, that might be a setup that I might take myself, and it would fail. And that right there is a perfect example of what people do not want to show you. What they don't want you to understand, that this stuff isn't going to work for you all the time. It isn't guaranteed. No setups, formations, charts, earnings, news, none of that stuff is guaranteed. If it was, every single person would be green every day, and it just doesn't work like that. When you see something that is attempting to do what you think should be happening to the trade. The probability of it, that's your game plan, right? The probability is that this candle pattern is going to produce a result that's going to be profitable for me. And that's why you take in the chart based on a certain candlestick. You don't take a chart or take a trade because you're seeing a weakening trade, or you're obviously, I'm thinking that you're long, right? You don't take a chart because you're feeling a rejection on the chart. You're taking a chart because you're feeling a continuation on the chart. So every single candlestick pattern that you see, every single candlestick that you're looking at is not necessarily going to be a perfect area, a perfect exit or entry, or a formula to work on, but it is a part of your trading routine that you should be aware of. You should know what the candlesticks look like. You should know the general look of a candle, the meaning of that candle. Let's just take an individual candle, any single candle. Okay, so let's take this red one. I'm not using it in reference to I'm not using the candlestick in reference to anything other than what I'm trying to show you here, okay? Price opened up here, right at this arrow. It's a red candle, so I knew that the price went down, right? So we know that just by looking at it, we know that the price went down. So we know that the opening price was here, and we do know that the chart popped up to that level, and we knew that the chart pulled down to that level, and here we are where the price actually closed on the chart. So we know a whole bunch of things about this individual candle. There's nothing else that I'm looking at other than this individual red candle here. So we know a whole bunch of things about this. We know just by the candle itself. We know where it pulled to, where it opened up at. We know that the chart attempted to push. Now here's where it gets interesting as a candlestick trader. This is just a 5-minute time frame, so each candle only represents 5-minute worth of trading time. Once the chart pulls back here, see the bottom of the previous candle? The chart is supposed to hold there. I'm sure if I open this up to a 1-minute time frame that there was actually some areas on this chart that it possibly did try to hold. The chart should have held at this area here. Being that it did not hold at that area there, it provides you with the knowledge right away that this slight formation, however big this move turned out to be, I really don't care. It's not about the longevity of the move. It's about the initial, the initial right here, right now, the entry area, the place on the chart where it makes the most sense for you to either get into a short position or exit a long position. So just on this candlestick alone, we can see the volume that came out of it. We can see the strength of the downside move. And what I like you to see is, and I know that this really isn't about candlesticks right now, and it's a whole other, I think it's a whole other webinar. But and I think it was done 2 weeks ago, the Fibonacci part, where if this chart broke the lows of the previous candle and didn't hold just about in this area here, it also gives you a confirmation of the downside move. So not only did it fail to hold the bottom of the previous candle, but it failed to also hold the Fibonacci pullback retracement area, which means that the move to the downside should result in a bigger play altogether, which is a bigger downside move. And then from this one candlestick reaction here, you can see how the chart broke the previous low, broke the Fibonacci area, and then resulted in a bigger pull to the downside. Now that's just one candlestick, a random candlestick. Let's look at a green candlestick and let's just kind of go through what the meaning of that one is. Now, it doesn't really matter in which relationship I'm using it in. I really don't care if it resulted in a bigger move or not. I'm just showing you the actual candlestick itself. price opened here. How do we know that the price opened here? Well, the candle's green, so I know that it went up, and I know that this is the bottom of the candle. I also know that this is where the lowest point is. This is where the chart pulled down to, and you have buyers that pushed it up. So basically, as far as the price action goes, you have a candle that opened above the close of the previous candle, which makes it bullish. Sellers tried to take some money off, and you notice that they held the bottom. It didn't break the low of the previous candle, giving it a bullish feeling. The buyers kept it up all the way up, and they pushed it to this point, and then some profit takers came in and they closed it here. So as far as this candle pattern, this candlestick alone goes, just this individual candle, we know a lot of things about it. We know that the intention was for a stronger move. The candle opened above and dipped, retraced a perfect amount, and pushed to the upside. So we know a lot of things about just this candlestick alone. We know that the chart was supposed to be stronger. So understanding that that chart is supposed to be stronger, you would expect a bigger move. And as I said before, this is a prime example of a perfect bullish breakout candlestick that fails. And it obviously resulted in a big downside move. And so the thing is that no matter what candlesticks you're looking at, they don't always produce that result that you want. Even on a candlestick like this is a prime suspect for a perfect breakout setup with volume and everything that ended up failing on you. And the chart broke through the uptrend and everything, and then still failed on you. So let's go into any other chart actually. Okay, this is the IPO from today, SSTI. Only one day of only one day of data to deal with. So let's go through some of the candlestick formation. So now you know what a candlestick itself, an individual single candlestick, looks like, and the reasoning for them being green or red. So let's just go through a couple of candlestick formations. So an individual candlestick stands by itself. There are so many different types of candlesticks. For me, they can be called 100 different names, but do you really care what they're called, or do you really just care about what they look like, so when you see them on a chart you'll be able to quickly associate yourself with them? And so you don't care what these candlesticks are called. I don't care if you call them a long leg doji. I don't care if you call them a dragonfly doji. Don't care if you call them a hammer. I don't really care if you call them a goat. It doesn't really matter what the names are, as long as the reaction of that particular look of a candle can result in some sort of a positive, profitable trade for you. So when you're looking at individual candlesticks, just single candlesticks, one at a time, there are a lot of different names associated with them. For me, what I like to see are certain types of candlesticks, just individual ones, okay? For example, if you see this candle at the bottom of a chart, that's a hammer, right? If you see it at the bottom of a chart, it's a bullish signal. If you see this exact candle, which is a bullish signal if you catch it at the bottom of a chart. If you see that exact candle at the top of a chart, it's a bearish signal. So the same candlestick, right? They're called two different things. So if this was a little bit shorter, it'd have a different name. If it had a little wick, it would have a different name. But the relative look of what you're going for is something that looks like a hammer. If you see it at the top of a chart, the candlesticks are telling you a whole bunch of things at the same time. Candlesticks are telling you that maybe it's time for you to reduce some of that position. They don't always fail right at the top. They don't always just result in a downside move or an aggressive pull or anything, but they are telling you that we are starting to lessen, to weaken, to give you signs that maybe the chart is about to take a pullback, and maybe you should be trying to profit take off of these candlesticks. So again, same exact candle, they look the same way, okay? I mean, like, let's look at two hammers on this chart. Trying to kind of scan through here and see two different hammers. Obviously, there's a hammer candle here, that individual candle right there, and that's an individual little hammer right there. Hammer at the bottom gives you an upside move. These are all hindsight stuff, though. Okay, and I think I've spoken about this enough times to help you realize that anything that I bring up here is not live trading data. Nothing that I bring up here, unless we're looking at futures charts right now, there is absolutely nothing here that I can teach you that isn't hindsight. Okay, so there's a hammer and it produces an upside move. That's as hindsight as I can get. And why? Because I'm a realistic person, and it's a hindsight thing. Because there's a hammer, oh, it goes up. There's a hanging man, oh, it pulls back. And we can do this with any single chart that you want to go through. I mean, there can be any single chart that I can bring up hindsight wise and tell you exactly, well, there you should have been long, you should have been short, and that really doesn't help you as a trader, though. And you know this as traders, you know this. It doesn't help you during the day, does it? Me showing you, hey, look, topping candle, topping candles, bearish engulfing. Me showing you this right now, you say, oh, how about these down here, strong, bullish harami, candle gapped up above it, right? All of these things you're saying, oh, right? Because it's all hindsight. I can show you any single chart you want to bring up, and I can show you the candlesticks that resulted in certain type of reactions. This one's boring, so it really doesn't have a lot of action. And so here's a bullish engulfing. Oh, you should have been long there, right? I mean, here's a huge dark cloud cover. Well, obviously a chart was going to pull back there. So I can show you any kind of candlestick patterns that are going to result into some sort of a positive or negative response. And so what I'm not trying to do, and I know that this maybe, and I really go deep in my head when I do things. Sometimes maybe I think that I'm portraying it like I'm trying to, like I see it in my head. Because what I see in my head sometimes is very easy for me to understand inside of my head. Maybe sometimes it isn't as easy for me as I'm talking about it, but the candlesticks themselves, or the chart patterns, or the formations, or whatever you're looking at right now is all hindsight. And it doesn't help you one bit. Right now, me showing you this stuff doesn't help you one bit during the trading day. So then what's this for? What's the purpose here, right? How do you help me to take this dead data, right? It's past data. This is past trades. How do you help me to take this thing that we're looking at and formulate a trade into the day that we're actually live trading? So let's get into that. Okay, so how do you take examples that I'm showing you here of different types of candlesticks and bring them into live trading? Before I get into that, though, I want to make sure that everybody understands the different types of candlesticks out there. I just showed you the hammer, which is the little hammer. Top of a chart means weakness, bottom of a chart means strength. You have just single doji candles with just a little body of the candle, top wick, bottom wick. I mean, you have shooting stars. These are little smaller inverted hammers at the top of a chart. These are inverted hammers where you have a longer wick, and they can be found bearish at the top of a chart or bullish actually at the bottom of a chart. As far as individual candlesticks, you have strong ones also, no wicks, top or bottom. A full red candle like this, no wicks, top or bottom, is called a red Maribozu and signals a very strong downside move. It's not that common. And a green one just like this is a green Maribozu, no wicks at the top or at the bottom, and signals a very strong reversal move to the upside. So when you basically see, like, okay, say this is a red Mariposa, single individual candle that doesn't have a wick to the top or bottom. Here's a prime example of one, but this chart really may not be a perfect candidate for something like this, but it still is a green Mariposa, and obviously, well, that's hindsight, right? Hindsight. Obviously it produced a monster move to the upside. But again, these are hindsight stuff that it really isn't fair. And I know you're probably saying, well, what the hell? Why does this matter now? Why? So then, why you showing me these things and telling me that it's hindsight? Because obviously it is hindsight. I can show you 1,000 stuff that makes sense to you right now that may not may not come into fruition when you actually trade, when you actually go into your trading day. And so that's what I'm really so I'm really trying to get to you, that I can show you all of these candlesticks and all of these chart formations and all of these patterns, and when they happen during the day for you, when you see them during the day, either that you don't believe or trust the strategy, which in this case it's candlesticks, either that you're not there ready to put your all into that certain candlestick or that certain candlestick formation, or either is it that that well, first of all, maybe you just don't trust the candlesticks themselves, as on a whole, because look, let's just keep it about candlesticks, right? So let's not bring up anything else. As far as when you see a candlestick that you're interested in, you see a hammer at the bottom of a chart, but you don't want to be long. You see a doji and you understand that that's indecision at the top of a chart, and you're long on it, but you don't want to take money off. You see a shooting star at the top of a chart, you understand that that means that sellers are starting to come in, and maybe you should take something off, but you don't. Inverted hammer at the top of the chart, you know that the chart's showing you that, hey, we're slowing down. Hey, we're getting some sellers coming in. Hey, you should be taking some money off, but you don't. You see a red Maribozu at the top of a chart, but you still don't care about taking money off the chart. You still feel confident that it goes much higher. You stay into the chart sometimes only to see yourself go red, so you don't sell. You see a green Maribozu at the bottom of a chart, and you still don't you don't respect it. You don't say, hey, well, we can go higher. Let me hold something for a bigger move. Let me try to trust this candlestick, and let's see if it actually produces a positive, profitable result for me. So a lot of times, I feel like people know what they want to do. How many you can Google candlesticks right now, and I'm sure that you'll be able to find a whole bunch of them, and really nice pictures and definitions and little arrows that point to exactly what you think that you want to see. And then you'll be able to think that maybe you can apply this to real life trading. And so you wake up and you see these candlesticks and you go, well, oh, well, there it is. There's a hammer. I gotta be long. And then you don't understand that you took a hammer at the top of a chart or at a resistance area, and it's not actually at a pullback area. It's not at a strength. It's not at a support. So you're actually taking the pattern, the candlestick that should be bullish in a bearish scenario, and expecting a positive result, getting a negative result, and then deciding that, hey, well, that candlestick just doesn't work. And so you end up in a chart with a setup, with a trade, with a candlestick that fails you, but you didn't understand why is it that it failed you. Where is it in relationship to the chart that it failed you? I gotta get into that a little bit after, but I do want to go. I did the individual candlesticks as quickly as I could. I really think that this entire candlestick thing could be an entire session, because it's really, there's so much more depth in it that me just kind of talking about it right now, I don't feel like I can show you through my eyes what I see when I see them. When the candlesticks are reacting into the day, when they're doing their thing during the day, I love to look at them move. I love to look at when you're seeing them pop up to the upside or pull back aggressively to the downside. You can get a feel, a real life feel of the price action, of the strength, of the people that are interested in taking this thing higher, the people that are interested in just not taking it higher. Not taking it higher doesn't mean sellers, but not taking it higher could just mean that they're not ready. The chart isn't ready to move yet. But actually looking at live candlesticks formed during the day, it's a beautiful thing. If you're long on a chart and the candlesticks are red, it's not a beautiful thing, and you hate those red candles. I know how that feels. But just noticing how the candles react, how they play, how they set up. It's a beautiful thing. For me, it's really is a work of art. Just kind of looking at an individual candlestick and seeing the way that it moves during the day, live data, not knowing what's going on, no hindsight trading, no, hey, well, there's a bearish engulfing, you should have been short, none of that kind of crap. Looking at it during the day, actually working to the way that you want it to work is a beautiful thing. Today my trading day was pretty bad, and so I have no excuse for it. It was pretty bad, and it wasn't that I traded badly. It's just that the setups that I took didn't really pan out the way that I wanted it to. So it's not a prime example of showing you what a good trader should be like, because today for me just didn't work. I took quite a bit of setups, and they just they tend to fail on me today, and I respected that. I took a loss, and so I was actually down pretty hefty, and then I ended up coming back, and I closed the day $561 down, which for me is something that I can handle. It's not a mental breaker for me. I'll be able to be back on it tomorrow and be ready to mentally attack it again. But the setups that I took today, the candlesticks were misleading, the chart formations were misleading, and they just didn't have the continuation that I wanted. So the charts failed and I lost money, and so that's the end of that. Day's over, start over tomorrow. As far as for you and the candlesticks themselves, each individual candle tells a story, but then coupled with a friend. The candle that comes after the candle that you're looking at is the one that can really tell the story. When you see a hammer at the top of a chart, when you see an individual hammer, I'll give you a blank page. When you see an individual hammer at the top of the chart, and your chart's been going up, whatever, right? So your chart's been going up, and obviously you're in an uptrend, but you see a hammer at the top there. This candle sends a little warning. So this is just a warning candle right here. This is the candle that says, hey, if you're long and you're in a position to take some money off this trade, well, I'm telling you that maybe we should consider taking some of the chart off. The candle that comes next, the one that either opens above or underneath, tells you what to do. This is the warning candle, the one that gives you the, hey, open your eyes, take a look at what we're doing here for a second, and try to address the situation. The next candle that opens up, if it opens up above this candle, well, you can negate this hammer. Because then at this point, for right now at least, as long as the chart doesn't break the low of the previous candle's wick, you're safe to go. Because if it breaks the low of the previous wick, what would happen? If you can visualize that, what would happen? Well, what you would have happen is you would have a huge bearish engulfing. And then that chart pattern right there, those two candles would say, here's your warning, here's your reason to get out. So first you have a warning, like the yellow light when you're driving. So the warning for you comes in the shape of an individual candlestick right at the top of a chart. That's your warning. That's your amber light. When your other candle opens up after that and is a huge red candle that engulfs the body of the previous candle. That's your sell signal. That's you saying, well, this is time for me to exit the trade now. This was my warning to say, hey, let's look at it. This was my signal to say, let's exit. A lot of people see candlestick patterns like this, and now understand that if you're in this price from $20 and here you are at $23 and now the chart's starting to show you these kind of patterns, you don't have to worry about this too much, do you? Because you would take this as a consolidation zone into another leg up situation. You don't have to worry about this. But what about the guy that just got in here at $22.75? And the chart's at 23 showing you a price like that. Now that relationship now is different, no? It has to be different for that person that just got into the trade and starting to see these types of patterns at the top. Differ from the guy that's down here at 20. He doesn't have to worry about that. So he doesn't have to run away from this trade. But the person in at 23.75, 22.75, and you're starting to see patterns like that, you have to be concerned. Obviously, you don't have the amount of buffer zone needed to really correct this entire setup and have it retrace and all of that. So your exit strategy would be a lot quicker. The guy that's down here could be profit taken at this area, but doesn't have to exit a complete position. This person here may have to exit the complete position because it may not be enough buffer zone for this individual to keep the chart longer. So that's a bearish engulfing at the top of a chart. Any of the candlesticks that are bearish, little stars, spinning tops, shooting stars. I mean, there's so many different names. I mean, like, you can look at this candlestick here and you can say, well, that's an inverted hammer, and then somebody will look at it and say, well, that's a dragonfly or a tombstone doji. I mean, there's so many different types of names for the same type of thing, but what do you notice at all of these candlesticks? All of them. What do you notice in this entire bunch of candlesticks here? Wicks at the top. Wick there, wick there, wick there, wick there, wick there. A little quick trick about candlesticks is when you start seeing wicks at the top of a chart and you're long, the chart's already telling you that maybe you should start taking some money off. When you're at the bottom of a chart and you start seeing candlesticks at the bottom, hammers, charts that are looking where you can see wicks. When you start seeing wicks at the bottom of a chart, you start looking long. When you start seeing wicks at the top of a chart, you start looking short. And these are just the candles that are actually telling you a story a little bit. These are just the single candles that are trying to say to you, hey, we need to start thinking about this differently a bit, because there's a reason for you to be looking at the chart now differently from where you're looking at it currently. As far as candlesticks and their formations, I can go through 100 of them right now. I can probably spot at least, I'm just running through a fresh chart here on blue, and here is a bearish engulfing that if I looked at it right now, I'd say, well, obviously should have been short on that. Here's a dark cloud cover. Here's a bullish harami, bearish engulfing, shooting star, hammer, wick at the top, and then a spinning top gives me a short, huge bearish engulfing that engulfs not just the single candle but engulfs the other candle behind it. There are tons of patterns along with this entire chart that I can show you reasons to be long or short, and that's obviously now that the market's closed and this chart is in the past tense. Easy to look at charts after they're done with and say, well, obviously this is so simple. Why didn't you just play that flag to the upside, especially when you saw the flag and you saw the 50 EMA and you got a hammer at the bottom? Why didn't you just take that chart long and make money? Of course, it's simpler now to just look at things like this and say, well, this is what I should have done. Now, what's the difference between this and what you're doing during the day? What's the difference between me showing this to you right now and how can you formulate this little thing to make it something that's a little bit worthwhile to you? My moving averages are the 8, the 13, the 50, and the 200 SMA. All the previous ones are EMAs, okay? What I'm looking for in a 5 minute chart when I get into a certain situation where I'm looking at a chart to hold some support, if I'm not using fibs, because this isn't about fibs, this isn't about support as far as trend lines or anything like that. For right now, it's based on this chart. On this particular chart, where would I be looking for a long opportunity? And this was presented today for a trade on the long. Well, besides the fact that the note said long at a 108 from the open, um, the chart was presented here during the day for a trade. And so the reason for it was because the chart have proven before that it held the 50 EMA. When it came to the 50 EMA, it had a strong bounce candle above the 50 EMA. So basically the candlestick is telling you the sellers took the price under the 50 EMA and the buyers pushed it back over. Once back over, that was the buy signal for me, and that was me alerting the room for a long opportunity here for the people that wanted a long trade on blue. This is where the second opportunity was. The first opportunity was down here, one of the guys in our room, he's not here in the, no, he's not in the webinar. He was long at 100 and he sold at the close all day, one trade, blue. And so this area here was another long trade, and I do know that other members took it here also. The candlestick gave me the reasons here on this one. Where are you looking for certain types of candlestick patterns? Where are you looking for certain type of individual candlesticks that characterizes some sort of a move for you, either in the upside or the downside? Has to be an area. I can show you a lot of candlesticks that don't mean anything throughout this entire area. I could show you strong candlesticks, weak candlesticks. I can show you a lot of stuff here that doesn't make sense because it isn't at an area where it's supposed to be at. What I'm saying is, if you see a hammer in a long chart and it's not at a resistance area, it's not at a fib projected area, it's not at a trend line area, it's just a candle. That's it. Sometimes you don't have to take them so literally, because I don't, and it helps me to not try to overemphasize some of these things that I feel that some of these things are a little trivial, honestly. I'm a very avid candlestick trader, but I'm not so concerned where I lose focus on the general scope of the chart. So if I see a hammer coming up during inside of a chart, but I understand that it's not really sitting somewhere where it can really make a difference. If it's not at a resistance point, if it's not at a trend line, if it's not at a major moving average for me, I kind of overlook it as, hey, well, that's just another candlestick. That's okay. I'm not worried about it. I'm not putting so much emphasis onto every single candle that it depicts me being a continuation trader. So when I start seeing little topping candles like this, well, I know there's a couple of things. The only area that I'm seriously looking for a serious rejection candle is back to this area here. So little candlesticks like this are not bothering me that much. So individual candlesticks like this, red ones, green ones, spinning top, hanging man, whatever they are, doesn't really play that much of any kind of concern for me. It really doesn't bother me as much because I can just delete some of this. Okay, so when I see little things like this right here, okay, yep, shooting star, spinning top, hanging man, bullish engulfing, that's all great. But into this area, this whole bunch of candlesticks or candlesticks patterns really doesn't really mean all that to you. You should really be looking at certain candlesticks where they come into areas of the chart that really should mean something. Say for example when it comes into this resistance area here. And what do we have? We have a strong push candle. We have a strong bull buy candle right here. Candle opened above the previous candle, negating this little what could have been a bearish candle. Pushed right through it and then closed over the high from the last pivot, giving me strength, giving me authority, giving me that feeling that we can go higher. And so when the other one popped right through again and pulled back and basically retested the area of support from previous levels, then you kind of confirmed, well, this area here is going to produce a result off of this strong bullish candle that just pushed through the highs. So this individual candle here allows me to understand that if I'm long on the position, there's a high probability that it goes through. Now, if this same candle, I can't draw it over it, but if this same candle was to push up here and form a candle like this, a hanging man, that would differ the trade a lot. So now what would I be seeing? Well, I would be seeing a bearish candle at a perfect resistance area. It would adjust my thinking as far as, do we see continuation here, or should I be taking money? And so this is an example of where should you be taking some money. If you see a hammer like that and you know it's at a double top situation, then take something off of it. Don't wait for the chart to come all the way back down here and then decide, well, hey, let me just see if it holds the bottom here now. When you start seeing things like this, doesn't matter if you're up 10 cents, 15 cents, $2, $10, doesn't really matter how much you're up on the chart at that particular time. You got to start understanding that, look, if there's a reason for me to be taking something off, then why am I not taking that reason? If the chart's giving me a rejection candle at a double top, and if I'm only up on the chart 50 cents, but I don't want 50 cents, I want $1, so I'm going to force this chart to push through. I am going to do something miraculous by forcing this chart to break that high. And that's where a lot of people get into a lot of issues, right? The candlestick here, if it was a hanging man at the double top, would be saying, hey, look, take something off. Hey, look, I don't have enough strength to go through this area. I'm not going to do it. I'm going to fail. I'm showing you dojis. I'm giving you shooting stars. I'm not giving you the strength to go through. So you're only up 50 cents. You want $1. It's not going to happen. What are you going to do? That's where you have to make that decision as a trader. You have to be willing to say, well, look, what do I want? Well, I want $1. What is the chart giving me? The chart's only giving me 50 cents. So what do I do? A lot of people would stress the chart so much, they would force the need to make $1 over the actual chart itself. They would put that priority over what the chart is actually doing. They would say, I don't care if it's at 50 cents, it's at a double top, it's telling me to slow down. What I want is $1, and I'm going to stick it out till I get $1. And obviously it makes a huge difference when it comes to taking money out of a trade. So always try to remember where these candles are. Okay, so you have to be try to focus on the type of candlesticks that you are looking at, where they're located, and what you're trying to force your chart to actually do. As far as candlestick patterns go, there are a lot of them. The more important ones that you should be focused on, just like candlestick individual ones, the more important candlestick patterns that you should be looking at. A candlestick pattern is involving more than one candlestick, and the patterns themselves should be noted. There are easy ones that you should know off the top of your head. Bullish engulfing, when the green candle is bigger than the red candle, it engulfs the body of the last one. Bullish engulfing. Dark cloud covers. Bearish engulfing, like this guy here. Bearish engulfing. A dark cloud covers a chart is a previous candle that engulfs that. It doesn't really engulf the entire candle, but it does pull back 75% of the previous candle. Okay, so let's just, as for the sake of me not finding a prime example of it right now. Oh, here's one. Dark cloud cover here. So that's a candlestick pattern, right? Where it's basically it's exactly what it sounds like. It's a dark cloud cover, a menacing type of a candle pattern, something you should be not wanting to step out into. That rainstorm, the short dark cloud covers are beautiful for me. I love these candles. When I'm looking for a short, I rather look for a dark cloud cover than a hanging man or a doji or shooting star. I like dark cloud cover. It really does for me feel like a menace. And I like dark cloud covers. For me it kind of brings a lot of, I don't know, maybe it's just me with the meaning with the word, but I like dark cloud covers when I'm looking for when I'm looking for short and stuff. And then so obviously you would be getting this exact same candle. Every single candlestick that you see on a chart, if it's a bullish one, just reverse them, and it becomes a bearish one. So this is a dark cloud cover. What does the other one look like? Well, the green one would be 3/4 up the side of the red one, right? So let's look for a Pearson pattern. That's what those are called when it's the reversed side of things. And gosh, I'm really just kind of going through random charts here because it really isn't anything that I have like located or anything. I'm really just this chart is a horrible one, by the way. Oh, this is being a little hunt. Oh, maybe. Okay, here. Yeah, I can call this a Pearson pattern here because the chart just underneath it. So these two candlesticks here would be giving you a Pearson pattern, which is basically the reversal candle pushes up more than 50%. So why is 50% such an interesting number? Why is it that a candlestick formation should be noted if it pushes through 50%? Doesn't that have to do with fibs? Doesn't that allow you to understand that if a number pushes through past that 50% of the other candle, it reverses the signal? It changes it from being one direction to the other. So why would it that a formation of a pattern be noted as a, hey, if it closes above 75 or 50% of the candle or whatever, it's a reversal pattern. So wouldn't that be a small fib understanding in itself? Wouldn't that be something that's a little bit more deeper than just a Pearson pattern? And it would have to be resulted into something that's much bigger, into a fib area. And if the candle pattern is supposed to give you a result, then shouldn't it be the same for fibs? If a fib pushes through a 50%, shouldn't it give you more? And so the pattern is the exact same thing, just in a smaller time frame. Every single pattern, this is a 5-minute time frame. I can go through a 10-minute time frame and show you the same patterns. I can go through a 15-minute time frame and show you the same patterns. Every time frame that you use, the same patterns should result in a similar type of reaction. If you're looking at this exact chart right now, and you can obviously see these two candles here, and this one I don't know if it's pretty close to, but it could just be a good enough bearish engulfing, and that's a good reversal signal right there. That's a good hey, let's be looking to be exiting this trade. And so the chart obviously gave you the idea. On a 15-minute time frame, it gave you the idea. It said, hey, how about you take some of it off? Okay, we're looking okay there. You see another shooting star here. You say, hey, how about we take some of it off? Oh, I don't want to take any of it off because it's got to go higher. I'm determined to send the chart higher. Well, tell me what you do to send the chart higher, and then it would be a great understanding for you and I. But there's nothing that you can do to send the chart higher. But the candles are telling you, hey, slow down. Maybe take something off. But you're determined to take the chart higher. You're forcing the chart to do what it cannot do. It gave you a couple chances to do it. Warning, warning, warning. What? You're not listening? Fine. You're gonna have to take that red. And so the understanding of the candlesticks and their formations and what they're trying to tell you should help you to adjust to where you should be taking money off the chart. Now, this is a webinar about candlestick patterns alone and their formation, so I'm not going to try to get into too many other things. But the candlesticks themselves are telling you a story, and if you can really try to relate to the story, try to read into what they're saying, look behind the candle, see the depth of it, see the way that it's reacting, see the way when it pops, how much it pulls back, see the way when it pulls back, how quickly it pops, how fast does it move to the way upside, how fast does it move to the downside. Get a feel of the individual candle as you look at it intraday. And you may be thinking that this sounds a little crazy, but if you can really grasp a feel of what the individual candles are doing, you can kind of have them speak to you a bit. And sometimes you'll have bad trades like me today, and you're probably saying, well, this guy closed red, well, what the hell does he know? But my charts didn't work today, and I understood that, and I ended up closing red today, but that's fine. Doesn't mean that I still don't know what to do tomorrow. Doesn't mean that I still don't know how to address things next week. It's just today just didn't work out for me, so I move on. Part of trading. But the candlesticks themselves are going to allow you to decide what to do. You have to be willing to say that, hey, look, I want more. The chart doesn't want to give me more, so let me just kind of take what I got and be a little happy. And so when you see the actual charts that are telling you something, when you see the actual candlesticks that are telling you something, and you don't want to listen to them, that's your fault as a trader. It's not the candles, it's not the chart, it's not the formation. It's your fault as a trader. How much you decide to allow it to go back. When I have a chart that I'm in and I'm long, for example, and I want to see the move to the upside, but I see negative candles at the top, and I still stay into the chart. I stay into the chart because I understand where my support levels should be. I understand that if the chart pulls back to the 50% line and I was to sell that red position and take a loss, and it pulls back to 50% and holds, and it produces a positive outcome, then I would have taken a loss for no reason. And so when I have a red chart and I'm sitting on a red trade, I still have to allow the chart to work. Either it fails, either it breaks that last pivot point that's supposed to hold support, or it continues to the upside and I add over the higher pivot point. But the candles will tell you where you should be looking for some of these things to change the directions. And when you get the signals, allow them to kind of work for you. Allow the candlesticks to tell you what they really want to do, and listen to them, because they are trying to tell you something. So as far as the candlesticks and their formation goes, I feel like this can be so much longer and in depth. I think I can just take an individual candlestick and an individual candlestick pattern and turn it into a whole couple hours of conversation, but I don't have time for that, and neither do you. I'm sure everybody's probably watching the game. And so as far as for this session of the webinar, I am going to close it off with this.